The following is a paid program. The views and opinions expressed are those of the sponsor and do not necessarily reflect the views of Radio 1, WTLC AM 1310 The Light, and its management.
Welcome to the Home and Finance Show on AM 1310 The Light. Now it's time to get straight talk about financing a home and insider information about buying a home from the experts. And here they are, your hosts, Janice Bradley and Diana Rice Wilkerson.
Happy 4th of July weekend. Welcome to the Home and Finance Show. We are your host. I'm Diana Rice Wilkerson, loan originator with Fairway Mortgage, and my co-host.
Happy 4th, as she says. I'm Janice Bradley, JB Real Estate Consultants.
The Home and Finance Show is designed to bring you information so that you can make the best decisions when it comes to buying, building, refinancing, or selling real estate. We ask that you call us with questions, 239-1310. We would love to hear from you. We're going to give you straight talk and inside information. Those of you who listen to us on a regular basis know we just tell it like it is, and we keep it real. But at the end of the day, what we want you to know is that no question is a dumb question, and we encourage you to call with your questions because those will be the questions of someone else as well. As you also know, when we have guests, we bring you the best, and we have a hot show this afternoon, and our guest is Anthony Ruiz, who is with Credit Plus. We're going to be talking about credit. He is an account executive, and he does also included in his vast array of clients. Fairway Mortgage is one of his clients. And so we are so happy to have Anthony. Now, again, we're talking about credit, you guys, and you know that involves that three number Duhickman flicker called a score that controls the quality of our lives. It snuck up on us, right? Oh my God.
It did.
But you know what? I must say that from just talking with clients, we're getting better and better educated about it and how to manage it and what it is and all of that good stuff. But nonetheless, we would encourage you to call with your questions, 317-239-1310. Also, if you're in the market to buy, build, refinance, possibly buy the home that you're living in, for sale by owner, whatever that activity might be when it comes to home ownership, if you're not represented by a realtor or a lender, Janice and I would appreciate it if you would consider us. Again, my name's Diana Rice Wilkerson. Janice has told me my job was to show you the money.
Absolutely.
So that is what I focus on. So whether you're ready to go now or possibly a year or two from now, whatever it is, we can talk about it and we'll get you on the right track. I would encourage you to apply on my website at www.loanswithdiana, www.loanswithdiana, and that's DIANA. You can apply online. You can call me directly. My number is 317-402-5555. And Janice said, just convert those fives into dollar signs. It'll help you remember. So again, we have a wonderful guest, and we're going to hear from Janice, and then we're going to get on with the show because we have a lot to cover, and we know when it comes to credit, you have a lot to say.
Well, let's see. We haven't had 90-degree weather, have we? Not this week. But anyway, as you know, we get it, and we probably were going to have it again, which means hot, which also shares with you that this market is hot. The market is hot. So, again, Mr. and Mrs. Seller, if you're not sure maybe if this is a good time for you to put your house on the market, do so. If you're empty nesters or, have some equity in your house, just not quite sure what you want to do, but start thinking about it because your house will sell. Your house will sell. Slap a little paint, get the cobwebs off the front door since you go into the garage area, all that jazz, manicure your lawn, stick some flowers out there. Just don't forget to water them. I forget to water. So what can I say? But anyway, it is a good time to sell. It's a good time to buy. Buyers, there's a shortage of homes, so make sure you are pre-approved. You cannot even think about writing an offer without knowing that you can buy this house. Let me just kind of share something with you real quick. You have your agents that are representing you as a buyer's agent, and then you have listing agents who are representing the sellers. So that listing agent will not even take that offer to the seller if they do not have a pre-approved letter. So we want to make sure that you have that. Don't put, what does they say,
Cart before the horse. I knew you were going to say that.
Thank you, because you've been saying some of my sayings. We've been around each other for a long time. But the rates are great. The rates are great. Homes are appraising. The appreciation is there. So it's really just a fantastic time. Again, there's a lot of things we can talk about, but this credit issue is always going to be a hot issue that can take up most of our time. So I'm Janice Bradley. I can handle all of your real estate needs. My number is 317-590-7348. And Diana usually gives out my number, but we're going to let her give her own number a little bit later. Okay, Diana, tell us about these rates.
Oh, rates are great. Oh, God. Rates are great. Lord Jesus. You guys, come on now. If you've ever considered becoming a homeowner, again, all I can tell you is prices are still good. Indianapolis, Indiana still remains one of the most affordable cities in the United States of America. That is not going to stay that way forever, and interest rates are still low. I'm still doing a lot of VA loans. Janice, we've had such a number. First of all, kudos to the veterans.
Exactly.
Kudos
I don't
to
know
the
if they just
veterans.
found out or what.
Oh,
but
my God.
it is so wonderful.
It's
it is
wonderful.
so wonderful.
Take advantage of your certificate of eligibility.
I don't talk about the National Guard situation.
Oh, yeah.
Because I learned something.
Okay, well, if you've been in the National Guard or the reserves, you
Okay.
still may be eligible for a VA loan. Also, if you are the spouse of a deceased veteran who passed as a result of injuries from the military, you also can be eligible to take advantage of a VA loan. So if you have questions about it, just call me. But again, whether you're a veteran that is looking to buy, whether you're a veteran that has a mortgage right now that is not a VA mortgage and possibly you want to refinance, whether you want to refinance and get cash out, we will lend 100%. We go down to a 580 credit score. It just gets no better. So, the down payment assistance programs are alive and well. So we have a down payment assistance program where you can get just a straight grant. We have a down payment assistance program where you can get a loan. And with that program, you can get, you don't have any payments, but you can also take advantage of the mortgage credit certificate. Well, all I can say is I work at Fairway and we've got it going on. We have all the programs. So again, if you have an interest in getting pre-approved, I would encourage you to go online, unless you prefer not to, www.loanswithdiana.com, and my phone number is 317-402-5555.
Fantastic.
Drum roll?
Drum roll.
Okay.
Do we have a drum roll? Make it up. Okay.
Drum roll.
We'll do the applause.
The applause. On with the show. We are going to again introduce you to our guest. His name is Anthony Ruiz, which I probably am not saying that right, but I just call him Anthony. He is account executive with Credit Plus, and Credit Plus is one of the major credit companies that we're going to allow Anthony to talk more about, because they're not a credit bureau. They're a company, but this is where I know I get my credit reports from. Anthony is here today to answer your questions about credit. So whether you have questions about scores, what's new out there on the horizon, and I know he's going to be sharing some information with us on some changes. There's a ton of questions, how quick scores change. Some people think that the score changes once a month, period, certain time of the month. He's here to answer all of those questions for you. So do call us at 317-239-1310. Hello, Anthony.
Greetings, ladies. How are we doing today?
We're doing great. We're doing great because we know that when we talk about credit, it's on and popping. There's no ifs and buts about it. So it looks like we may have a caller, but I said to myself, what do you ask people, an experienced person like you, an authority? Because you're an authority when it comes to
that's right.
To credit. But what would you say are things that the consumer does not really understand about credit?
In the grand scheme of things, I think a lot of consumers get confused with the different types of credit reports that are available to them. I think the biggest battle that my clientele battle on the day-to-day basis is the Discover card, the Credit Karmas, that have their credit score on the either with Credit Karma or on their credit card statement on a monthly basis. So they think their credit score is 720 or 740, which is a consumer report, which is strictly for the credit cards. So when they go to see a lender and the lender pulls it and they're 640 or 660, there's some confusion and they don't understand that the FICO score takes considerably more into consideration when achieving that score for a mortgage. So that's probably the number one question I get and the number one problem that my clientele face on the day-to-day basis. And that is just anybody that's ever watched ESPN on a Saturday afternoon during college football, the Credit Karma commercial rolls about every 15 minutes.
Okay.
So I see where a lot of people can be confused. And part of what I do with my clientele is give them the opportunity to see the difference, because the scoring models, we don't know the recipe for it. That's something held near and dear to the Bureau's heart. So, but we do know what can improve a person's situation by, I've been at this 17 years. So
Okay.
I have a pretty good understanding of what a person, their credit report looks like and what we can do to help them make some minor adjustments or some major adjustments to help them get to that next level. Whether that's buying a home today, this month, or if that's going to be a 6-month or a 12-month project where they have to get some things taken care of and put into perspective so they have their financing in order and then their credit report updated the way they need it to, and things of that nature. I think with that being said, today is July 1st,
Yes.
as we know. The credit reporting agencies made an announcement a few months ago that they were going to remove tax liens and civil judgments from the credit reports as of today. I am not sure what this is going to be
Okay.
long term.
Okay.
Okay, so I'm not an attorney. I'm not. All I'm going to tell you right now is that's a pretty big and drastic adjustment to
It
the credit
is.
reports. So there are about 12 million Americans that are going to have their FICO score adjusted today.
Whoa.
And that's only about 6% of the number of people that have a FICO score for a mortgage.
I see.
So when you look at it and put it into perspective, that's a pretty small number, but it's a really big number. 12 million people is a lot of people.
It sure is.
So what they have put out, they anticipate on average, not everybody's going to see a great big jump. Some people are going to see bigger than others, but they say on average about 20-point increase to those on average for those 12 million people. So if
So it doesn't matter what type of lien?
tax lien
Yeah.
and then civil judgments.
And
Civil
Now, is
judgments.
that all tax liens and all civil judgments, or is there?
That's what we're being told. I
Okay.
mean, until we see it
Yeah,
in
we won't
action,
know.
we don't know.
Right.
So I'm not going to be the person to say, yeah, that's absolutely. I'm not going to be that person. I
Right.
don't know.
Right.
Right.
We know what we've been given in writing. We know what we've heard.
Yeah.
But like anything, until you see it, it's in full motion. You won't really know the outcome of that.
So I'm going to be the consumer here for a minute. So, okay, so I know on my credit report that I have a tax lien and a civil judgment. So am I okay to just like wait until July hits, right, which is today, I guess, and then pull my credit and it shouldn't be there anymore? Or?
That's what we're being told. But then,
Okay.
there again, it still could show.
Okay.
There could be some underlying reasons for it to still
Okay.
report to the Bureau. I'm not saying all of them are going to be gone. I'm just
Okay.
saying that's what we've been told is going to happen. So until when Monday rolls around and I start looking through credit reports
Yeah, we'll
with my
see.
clients, and I'm going to ask specifically clients that know that there was supposed to have been something there that is no longer there. Then it'll take me probably 6 months to get a
Yes.
good feel for
Right.
what this really is going to look like and really what's happening with the reports and how it's impacting scores and things of that nature. So,
if it's not on my credit, does that mean I don't owe it?
oh no, it means you still owe it. There are different philosophies. So we have 3 major lenders that are in the market, as you would know. There's Fannie, Freddie, and Ginnie. Fannie is probably one of the bigger ones that lend out there. They're relying on the lenders in their application, our credit report that we provide, and then the title search to ensure that the tax liens or civil judgments have been identified if they're supposed to be there. So honesty is the best policy.
Yeah.
Because as a consumer, if you lie about it and we find out about it later, you could nix the deal altogether.
Altogether.
Yeah.
Exactly.
So you could get all the way to the end, have money invested in this, and you get turned down because the title search definitely shows that you had tax liens and judgments that were out there that you lied about on your application.
Yeah.
So.
Yep. And for loan officers, we need to ask those questions.
Absolutely.
So the thing about it is, if we don't ask, the consumer may not answer or volunteer because, why volunteer if you're not asking me? Maybe that doesn't really matter. So we have to incorporate in our interview asking those questions to just try and help avoid those last minute
absolutely
blow-ups.
correct.
Now, I want to go back to what you said about like the Discover card
Sure.
statement.
Mm-hmm.
There's a credit score on the Discover card statement, and that's considered a consumer score
That is.
versus the FICO score.
That's correct. And they actually call it a FICO score, which it is. It's just a different model
It's
of
a
the FICO.
model of the FICO.
That's correct.
Okay.
So-
And how many versions of FICO out there, just generally, would you say?
I know that we have the consumer and the mortgage
Okay.
that are out there. It just there's different versions of
Mm-hmm.
it, so just depending on they can pick which one they want.
Yes.
So I mean, it's really up to the lender or the creditor that which one they want to utilize. I know with you guys as lenders, you're set on what versions that you're allowed to use for the score models.
Mm-hmm.
So that's set in stone.
Right.
We can't deviate from that.
Right.
Because that's what comes down from Fannie and Freddie.
That's right.
So
That's right.
yeah.
What do you think, as a credit professional, do you have any idea why there are so many different
Yeah,
versions?
that was my question.
I mean, what would be the thinking behind that? I mean, it's mass confusion for the consumer.
And nothing is accurate. I mean, so, and it seems to me that's unfair to the consumer,
Yeah.
to not really have a more of an accurate information of knowing, where they really stand.
Well, with that point, to answer both your questions, I hopefully
We want both of our questions answered. Right.
Yeah, I feel like I'm being tagged in right now. Uncle. I say
Not at
uncle
all.
now. We're
Not
only
at all.
21 minutes into the show, and I'm already speaking uncle. No, seriously though. The information that is put on there is being governed a little bit differently now than it was back in the day. So 10 or 15 years ago, things were a little bit different than what they are today. We have the Consumer Protection Financial Bureau, CFPB,
Right.
that is out there protecting the consumers and the data that's being put on there. Now, there were 31 attorney generals that got together and they went to the bureaus and said, we want this data that's being put on the credit reports to be fair and accurate to the consumers. To your point, Janice, father, son, same name,
Right.
junior, senior.
Right.
One of them has a tax lien or judgment, but it's showing on the other's report.
Correct.
Because of the similarity in the name. Mm-hmm. So that is why we have the ability to correct that. But if they don't know how to get that fixed, they inadvertently are stuck with a problem that they don't know how to fix.
Right.
Unless they come to Diana and say, hey, Diana, how do I get this fixed? And she gives them the answer because she comes to me and
There
asks.
you go.
But, the different models they're not the issue, to be quite honest with you.
Okay.
It's just the creditors and the correct reporting of the data.
Okay.
So if you have a medical collection that was put on there and it was by accident or it was put on before the payment was received,
Okay.
those can be cleared up. It does take time. And to the people listening out there, be diligent. Don't give up on it. Don't throw your hands in the air, because if you do, one of two things is going to happen. You're going to have to deal with it either now or later. And it's better to deal with it now and get it taken care of. It may take you a month or two, maybe 3, depending on who you're dealing with and how easily they are to work with. But if you don't deal with it and you decide that something in your life changes, you get married, you have children, and you need to do something with your lifestyle, whether it's moving, upgrading, downgrading, whatever the case might be, and you have this stuff lingering around out there, you can lose your dream home. And to Janice's point earlier, it's a hot market. It's really hot. I'm out there with my clients every day. I was in one client's office. One of his borrowers had missed out on 5 homes.
Yeah.
And they were offering above asking price
Yeah.
on every one of them because, that's what's going on in some markets. And the people that come in that don't have their credit straight, they're even further behind because they want the home or they're living in a home that they want to buy because it's one of those rent-to-own type of situations. Right. And the person renting it wants to get out from underneath it and can't with you because you've got things on your credit.
Right.
So annualcreditreport.com is a place to get your credit report and pull it, take a look at it. You're not going to get scores unless you pay for it, but if you're doing that on an annual basis and something pops up and you address it right away, you're further ahead,
So you may not know the answer to this question, but time frame wise, and I guess it does depend on the creditor, let's say especially maybe medical. Do you know how long it takes before it does hit the credit report?
That'll vary by creditor. So that if some creditors do it immediately, and it might be 30 days.
It could be 30 days after.
It could be 30 days after the bill's not paid, or 60 or 90, whatever their time frame. They have policies and procedures that they have to follow.
I see.
Internally. Every creditor does. Some creditors don't report a 30-day late until it's actually 60. So, and some report 30 on a 30. So, technically speaking, you're late the day that it's due with some creditors. So, if it's due on the 1st of every month and you pay on the 2nd, you're late. So, and they can report it as such if they so choose, but most don't.
Yeah.
It's just too time consuming. It's very expensive,
Yeah.
and it's not worth it. That's why you see the grace periods on all these different things. Some are 15, some are 10-day, grace periods to make payments. Everybody's different, and if you're taking on a financial responsibility with credit cards or autos, you need to read the terms and conditions so you understand what you're getting yourself into financially, especially with the home. The home's the biggest investment you're probably going to make in your lifetime.
Absolutely.
For probably 95% of the consumers out there.
What do you suppose, and again, you may not know the answer to this, but these medical collections have just become such a nuisance within the, last 5 years, would you say?
I don't know, but I tell you what a nuisance they are. I have a client right now that has about 25 medical collections on their credit report, and it was all the result of the copay. And what happened was, because we don't understand our medical plans, many of us don't, and we also think things are covered that are not covered. And so they're all under $100, each one of them. But it's reaped havoc on her credit score.
Okay.
And so she's paid them all now, but when you pay off a collection, that doesn't mean that the score is going to go up.
So let's talk about that for a minute when we're talking about, a lot of times the clients are saying, well, I'm working on that myself. I have some collections. So I always love this conversation when we know that they've gone in and, again, we call it activity starts all over again. Talk about that a little bit.
So in years past, it used to be that if you had any sort of time frame on a collection, so if it was, we're 2017, July 1st, if you had a collection that was in July 1st of 2014, you didn't really want to do anything with it because if you paid it off, what we call the DLA, or the date of last activity, would update. So it would go from July of 2014 to July of 2017, which in most instances would have impacted the score negatively.
Right.
Even though it is a positive thing that you've paid off a collection, you're trying to put yourself back in line with what you need to do.
Right.
That's the way it used to be. I am seeing in some instances, not everyone, not all of them, but in some instances, you're actually seeing an improvement in score by paying off collections. So Diana, you have my analyzers with my system that you can go in and play with that and say, well, if I do pay off this collection or that collection, what does that do to my score? What's the impact? What's the end result today, immediately, or in 30, 60, 90 days?
Right.
But we can forecast that out. So we have the ability to allow the borrower, the consumer, to know what that looks like.
And that's fantastic.
So that tool is a huge asset to my clients that use that on the daily basis. Some use it more than others, but the ones that do use it find themselves in a position to not only assist today, But like Diane, you said earlier when we first got started, you may not be looking today, but maybe it's 6 months, a year, or 2 years down the road. Those are the people that, if they come to you now and start the process, you can forecast out in my system up to 2 years out, and you can give them an idea where they could wind up.
Excellent.
And I have seen in a lot of instances where people think, oh, I'm so far out, I'm not going to get a mortgage. And I play with it, and I'm like, well, you're only 4 months out. You're really not that far. Do you have a down payment?
Right.
No? Well, you better start saving because I think Diane's going to get you a loan. That sort of stuff, And Janice, we're going to get you on the hot seat and get you out there and showing some homes.
Exactly.
And let you work your magic to get them into a home that they want. So with the medical collections, things have evolved. There are more of them. And to your point earlier, that people don't know what's covered. They don't know what's not covered. You make a payment and it goes on something that was done 2 months earlier when you were in, and it doesn't go on the bill that you just paid because that's the way their billing system works. I know firsthand because I deal with that with my doctor's billing office. It drives me nuts. I called in one time and they had an escrow. They had my money in hold for the next time. I'm like, whoa, that's not how it works.
Right.
That's my money. That means you're not paying my bills accordingly when I send you a payment.
Right.
So unless you call and find out, that's frustrating. You just don't know unless you ask the right questions, and most people just don't. They don't know to ask.
They don't know to ask. And the other thing, two things, and this is what I kind of caution my clients about today, because in the world of FHA, which I do a lot of in VA, medical collections, you can have outstanding medical collections, and they just don't come into play any longer.
Well, they're crazy. I mean, when you were sharing about the copays,
yes. But this is the big but.
Okay.
The big but is, like we'll say as lenders, hey, we're not worried about the medical collections.
Okay.
But unpaid medical collections become judgments. And so it's like
we
may not be worried about them, but you really want to do something about it. You want to get on a payment arrangement. Now, I have found out, too, if when you get that bill early on, if you call and make a payment arrangement, sometimes that'll stop them from reporting it to the Bureau if you're paying it. But if you're not calling and you're not paying and they're sending you letters, but then if you get enough debt out there, I mean, those guys, they are not playing. They will flip that baby into a judgment. Now, my issue with that is now I'm dinged twice on my credit report.
You are.
I am dinged because they're medical collections, and I'm dinged because of the judgment. And that I really think is not good.
Well, there has been talk in the past about the medical collections once they're satisfied that they need to be removed if they're under a certain dollar amount.
Yes.
That I haven't seen much on that here recently.
Okay.
That was actually a couple of years ago. So it intrigues me as an individual, as a consumer, not necessarily because of my job and what I do on a day-to-day basis, but as a consumer, for those that have been battling. Maybe their spouse got sick and they wound up passing away from whatever that illness may have been, or they were in an accident and there's medical collections that wound up as judgments, civil judgments that are against them. Now, with them being removed, that helps them.
Yes.
And maybe now that we can get them into a home where we couldn't before, so that part intrigues me to see how this all plays out. I'm the eternal optimist. I want to look on the positive side of things, but in the line of work that I'm in, and I was a loan officer for a short period of time, and I've been in the lending world and the mortgage industry for, like I said, 17 years. So I've seen some of the ups and downs. Is this going to be another stumbling block? Not today, but 6 years from now, 5 years from now, where we have a bunch of defaults because somebody slaps a judgment on a home, a tax lien on a home or whatever it might be, and now they can't sell their home. Now they're stuck again. So my mind races. I'm a former engineer. I was an engineer before I got into the mortgage industry.
Oh, my God, details.
Details.
So
my.
these things make me question
Don't
things.
become an inspector either.
Oh, no.
Yeah.
Oh, no.
We know about engineers and inspectors. Let's talk a little bit about I'm always intrigued by the pie, quote unquote. So talk a little bit about the pie and how important that is and what people really need to pay attention to. secondly, I guess I might ask you maybe some of the do's and don'ts, and maybe building a better credit score.
So some of the I'm gonna answer both at the same time.
Oh,
I'm gonna
wow.
We're talk a little bit about the pie. I think the pie that you're referencing is the history, the utilization, and that sort of stuff. So as a consumer, your FICO score is based on the likelihood of going 90-day late, having a 90-day late in the next 24 months. Okay, and that score that represents what your history looks like, your utilization looks like is like this. So 35% of your score is based on your payment history. How often are you paying on time? So that's where a majority of your score comes from. That's the bigger chunk, the 35%. Then you're talking about utilization. That's 30%. So if I have 5 credit cards and I have a Visa, MasterCard, American Express, but I also have a Kohl's and a Fashion Bug. If I have those credit cards, now the Fashion Bug and Kohl's are probably going to have small balance or small credit lines. So you're going to want to keep the balances real low. So if you have a $500 credit limit on either one of them, $50 is all the more of a balance you want to carry on it to maximize your score.
Okay.
So now if you're just using it and you've bought a home, you've got your car, you're not really concerned about use it as you want. It doesn't really make a difference. But if you're going to zero in and you're going to see Diana and Janice to do your transaction for a mortgage and buy a home, then you want to try and keep the balances at $50. Never pay them off. Keep them going. And you want to utilize them so that they don't close them on you. And you don't want to close it because if you do close it, you lose the history. And as I talked about, that's a good portion of your score is that history. So you'll lose it if you close them. And then you start talking about the length of history, the time frame. So if you've got a credit card that you've had for 10 years, that's definitely not one that you want to close, even if you don't use it a whole lot. I have a lot of clients say, well, I'm not using it. I just want to close it. I'm like, let's look at the whole picture. What else do we have going on? Can you afford to close that one? Or do we have just 3 credit cards and now we're losing 99 months of credit history, and now you're back to square one with 2 cards that you just opened up 3 months ago. Okay, so I'm speaking from experience. I got upset with a couple of my credit card companies and I fired them. I called and canceled my cards, not really thinking about what it was going to do to my score because at the time I was in a home and didn't care. But it dropped me 80 points just by closing a couple credit cards that had all kinds of history. On it. So
I remember a few years ago, a gentleman called me, wanted to get financed, and what he had done, somehow he got a copy of his credit report. And that little section that says, basically, these are the reasons your score is not higher. That it'll give you multiple things.
The score models.
Including, it said on there, for him, it said, too many open lines of credit or something like that. So he goes through.
Oh, no.
Yes, he did. It's like you cannot use your logical mind in this business. And he was already well into the 700s. And what he did, he closed out all of these credit cards because he no longer used them. And it said too many open lines of credit. And his score went into the 600s. And he was completely devastated.
Yeah. True statement. I was in Louisville, Kentucky with a client. Credit Karma had given one of my clients' borrowers some information, and I was in the office just doing my normal rounds and seeing how things were going. And this individual asked me how likely it would be for him to become an 850 borrower. I'm like, that's a unicorn. I've never seen one. I'm like, I know that's the top end of the scale. Yeah. I'm like, where are you at now? He goes, I'm an 820, 818 FICO score on my mortgage or on my credit report. I'm like, that's great. He goes, but I want to be an 850. I'm like, okay, so what are you going to do about it? He goes, well, I was told to open up X number of credit cards, 23 of them.
23 credit cards?
Yes. And I'm like, are you kidding? He's like, no, this is exactly what I'm like. First of all, I don't know if there are 23 credit cards out there to be had.
Right.
And second of all, your score's going to plummet. He's like, why? Unlike on a credit card inquiry, it's a hard inquiry every time. Okay, so I'm going to talk.
So that's 23 of them.
That's exactly right. So let me give you a little bit of information. So when you start the mortgage application process and you want to shop, because that's your right to shop if you want, from the date that you pull your initial credit report, you have 30 days to pull your credit report on a mortgage, and then it'll count as one inquiry for a mortgage inquiry at the end of the 30 days. So
let's get clear. Day one, you go to ABC company, they pull your credit for a mortgage. And you can have maybe another lender pull.
you can have as many as you want.
You can have as many as you want pulled. They're going to be treated as one inquiry within that 30-day period of time.
So
awesome.
If we pull July 1st today, if you call Diana and say, I want to buy a house because Janice said it's a hot market and I want to sell and buy. So they come to you, pull, but they want to go to three other places. It's going to count as one inquiry.
And that's for FICO.
That's for the FICO mortgage inquiries.
Okay, awesome.
So
I'd heard something like that, but I wasn't sure about I didn't know if it was true, and I wasn't sure about the time frame.
Yes.
Is it the same with automobiles?
It is.
Okay.
I've read that it's 15 days in some articles and 30 days in others.
Okay.
So a rule of thumb for an auto is 15 days.
Yeah.
If you're going to keep shopping, if you have 2 inquiries in that 30-day window, it's not going to hurt you tremendously.
Right.
My best advice to those looking to buy an automobile, go visit a bank or a credit union that you have an established relationship with and get pre-approved. Mm-hmm. Because a smart buyer knows what they want to spend before they show up. Mm-hmm. And then they have the payment already established. So if they know that they want to spend $25,000 on a vehicle,
right,
when they go to their bank and sit down and get their terms and conditions, they know what it is. Then they just have to show up and negotiate the price on the vehicle. So
good information. Absolutely great information. We are going to take a quick break. Listeners, stay tuned.
Did you miss the Nightly Spirit with Darlene McCoy? Check out this moment.
Tell us how good God has been to you this week.
My church's grocery store just got a machine that is valued at $67,000 for $45.
So what are y'all going to do with this machine?
Well, our church has the first nonprofit grocery store ever connected to a church in history.
Wow.
This is in Hampton, Virginia.
Wonderful. Congratulations. I'm going to tell you something. The harvest is always greater than the seed.
We've been open a year now, and we've blessed 10,000 families in a year. So,
hallelujah.
We're looking for more, and this will allow us to do more.
The Nightly Spirit with Darlene McCoy. Weeknights from 8 to 11 on Indie Source for Inspiration and Praise. AM 1310, The Light. Your praise party and inspirational moments don't have to end on the radio. Get social with us online. Follow us on Instagram, Facebook, and Twitter at Praise Indie for moments of motivation, tickets to inspirational concerts and events, and more. Also, check in with us on PraiseIndie.com for headlines that are sweeping gospel music, indie, and our nation. Connect with us now at Praise Indie from Indie Source of Inspiration and Praise. AM 1310, The Light.
Welcome back. You are listening to the Home and Finance Show. Our guest today is Anthony Ruiz with Credit Plus, and we are talking about credit. The lines are awfully quiet out there, and we know that when the lines are quiet, you are absolutely soaking it in. So we love that. We also would love to hear your questions. If you have questions, feel free to call us at 317-239-1310. So, Anthony, before we went on break, we were talking about how inquiries for the purpose of a mortgage as well as for the purpose of an auto loan are treated differently than hard inquiries for the purpose of credit cards.
That's correct.
So will you talk a little bit more about, can you give us some kind of gauge on, if a person does apply for a credit card, what kind of points is that going to cost them?
Well, if I had that, I'd be a really rich man.
Okay.
I would. No, in all sincerity, everybody's profile is different. Mm-hmm. So the algorithm takes into a lot of things into consideration to generate what impacts it and how much and things of that nature. So when you're looking at an inquiry, it is very minimal. And as I said before break, on a mortgage inquiry, you can have, as many as you want, 3, 4, 5, 6, 7, whatever it might be, in a 30-day window on a mortgage application. But what will happen while you're applying for these mortgages, you have your creditors that you already have established reporting throughout the month. So you may have a Capital One, Discover, and a Credit One credit card. You have 3 credit cards, 2 autos, and some student loans.
Okay.
They will all report on different days of the month. So one may report on the 2nd, one may report on the 12th, one may report on the 28th, 15th, and 16th. So as you're applying for mortgages with different lenders, your score may vary slightly up or down depending on the utilization of the credit cards, if there was a late payment that appeared on the auto, or something of that nature. So you may see a fluctuation in your credit score, but it's not a direct derivative of the inquiry for the mortgage. So
Awesome information.
Okay.
So
Yeah, because we have heard clients get very upset and, accusing the lender of their credit score lowering because of the pulls.
That's right. And they'll tell me, Diana, I don't want you to pull my credit because, it's kind of, and I say it's overrated. I just feel that whole thing about, inquiring about, making inquiry on some credit that you truly need, whether it's an automobile or, that's just an overrated
You want to buy a home. I have to pull your credit.
Because our file it's electronic and everything is all integrated and merged and, so it has to be pulled in. So anyway, I just had a customer the other day who said her score had dropped 20 points because of a mortgage inquiry, and I found that a little bit hard to believe. And I did ask her about utilizing her credit cards.
that more than anything would probably had more to do with it.
Yes.
Wow.
And I'll be honest with you, I've seen a $40 increase on one credit card give you a 20-point drop.
Yeah.
Just because it hits a certain threshold for the limits. So on a $1,000 credit card, you can keep your balance at about $300 to maximize the score if you're trying to do that. And anything over $1,000, that 30% of available credit to the utilization is what you want to try and keep it at.
One of the things I love about Credit Plus and Anthony's company and Fairway is that we do have those tools, the simulators, and we have, I don't know if it's Credit Expert or some type of analyzer, and it does allow us to manipulate the information that's in the bureau report and help you really make good decisions about what to pay. Because some people think they really need to be debt-free in order to get qualified for a mortgage when they don't, and they just have a lot of ideas about what people have
listening to other
shared.
people, and every situation is so different.
Yes, so we can actually go into your report, tweak it, and see exactly what you need to do to raise that score. Good afternoon. Thank you for calling the Home and Finance Show. This is Sheena we're talking to. How are you?
Good. How are you?
Fine, thank you. Will you go ahead with your question or comment?
Well, my question, I was listening, and Anthony said that the credit score is made up of a couple of things. History was 35%, utilization was 30%. Did I miss the remaining 25%?
We didn't cover it. We got sidetracked. I apologize.
We knew you were listening.
Wow, now we know you were listening. You taking notes? Oh, that's great.
I am taking notes.
We appreciate
Very
that.
good. So the length of history is 15% of the score. And then the types are mixed, whether it's a finance, credit card, auto, mortgage, that's 10% of your score. And then the inquiries that we've been talking so much about, that's the other 10%.
Okay.
So the credit card inquiries, auto inquiries, the mortgage inquiries, that derives the remaining 10% to give you your score.
Very good. Does that answer your question?
That does answer my question.
Thank you.
Thank
so
you.
much.
Thank you for calling.
We have Anonymous on the line. Thank you for calling the Home and Finance Show, Anonymous. Please go ahead with your question or comment.
Okay, my question today is regards to when you have credit cards with zero balances that you haven't used and you received zero balance letters, does it affect your credit score, or should you just have them closed all the way out?
You know, that's a great question. I actually had that happen to myself a few years ago. I had a credit card company from a credit union that I had out of another city, another state, that I didn't utilize anymore, and they sent me the letter, and they did close it on me, but I had established other credit that did not impact me all that much. it was one less credit card. If you only have 1 or 2, maybe 3 credit cards, my rule of thumb is use it, put a $50 dinner on it or tank of gas or something, and just utilize it sparingly. Closing those credit cards can cause your score to dip. And if you're in a position where you think you may want to buy either a car or buy a home, that could impact your score negatively. And once it's closed, you can't get those points back.
I see.
Oh, okay, and I do have another question.
Sure,
in regards to if you had a judgment issue that was probably years old and you paid it years ago, but it wasn't really reported accurately on their end to the credit reporting agencies, was it TransUnion, Equifax, and the other one. And if you do have a letter saying it was paid off, dated back probably about 5 years ago, is there an address I could send that to? Because I don't know why the agency didn't. I don't know why it wasn't reporting. But do you have an address to those agencies, or should I send them the letter?
Yes. What you can do is go to annualcreditreport.com and pull your free annual credit report, and then on that, you'll actually have the ability to contact the bureaus. That'll give you the consumer affairs number directly, and once you have that, you can send them, or you can call and talk to them and have them get a copy of your letter showing that it's satisfied, and it will update it for you.
Okay, annualcreditreport.com.
Yep.
Thank you.
We appreciate your calling.
Very good questions.
So, Anthony, let's talk a little bit about credit repair, the good, bad, and the ugly.
There are plenty of people out there doing credit repair.
Yes.
Traditionally, what I see from credit repair companies is they want to dispute all the trade lines, whether it's accurate or not. For Diana, what that creates is some language on the credit reports that the lenders that she sends the loans to don't like, which creates bigger issues. And for the consumer that's going to the credit repair company, it gives them a false sense of security. So the credit repair company says, I'll get your score up 100 points. Well, they'll get it up 100 points, but it's a false pass because the dispute language, it winds up on the credit report on those specific trade lines. What happens is when the credit repair company sends a letter and says, the consumer disputes this trade line, it is not theirs, it's not accurately reporting, whatever the verbiage is that they would use, it pulls that trade line out of the algorithm. So that is no longer being calculated.
Right.
So the score artificially will inflate. And then if you do that for a handful of negative trade lines on a credit report, it'll artificially inflate that many times over.
I see.
So you could wind up with a 100-point improvement, but the second Diana gets the loan,
disputes alone. Okay,
she has
so
to
Diana,
remove them.
what are you going to do with these disputes?
Well, according to Fannie, Freddie, and Jenny, they say if it is non-medical, if it's medical, no problem. If it's non-medical, so we're talking car loans, any kind of loan, any type of credit card with an outstanding balance, okay, then we have to take it out of dispute. It has to come out of dispute. So, and the credit then needs to be repulled. So we need to get rid of that artificial score and get to the real score.
Which is counterproductive.
Yes, it's very counterproductive. And so bottom line, be careful about signing up with, my suggestion is be careful about signing up with credit repair companies without a good understanding of their process and what they're guaranteeing and the whole entire bit.
Well, then the cost.
And
because
yes.
so many of them charge an arm and a leg to get credit repair done.
That's right.
And then some of them will charge you an arm and a leg and not give you a guarantee of what they're going to do is going to be fair and accurate when it's done.
Right. And what I've seen happen, too, is a borrower may come to me with a better score, and I look at the credit report, and I really don't see anything wrong with it. And then, say it takes them a minute to find a house, and then I have to refresh the credit. Well, the accounts that were either removed or maybe were in dispute, now they're not in dispute. The dispute's been resolved. Now they're back into calculating. Now the score's down, and that's after the consumer has paid their money.
Right.
You see what I'm saying?
I
so,
see.
Bottom line is if you owe it, get on the phone and negotiate it and pay it off, as opposed to we can't.
Yeah,
credit repair people cannot make things go away
Right,
for permanent.
Right.
You know what I'm saying? So, as Anthony
Usually,
said,
you should have some type of proof that it's either not yours or you paid it. I mean, I'm sure that there are some issues where maybe you can't prove it, but then what's that other situation where you have to make them prove that it is your debt?
But and I hear the debt validation letter where they have to prove. But people, to me, generally the consumer is feeling like you can fix it. We're in that society where we want you to just fix it.
Mm-hmm.
You know what I'm saying? So I think they approach, if someone knows that their credit is kind of tough, rough, they may pay somebody wanting them to fix it. And really, that person may not be able to do what you're asking them to do, but they can give you the appearance that they're going to while they're taking your money. You know what I'm saying?
Got you. I
so
got
it's kind
you.
of like if you owe it, get on the phone, call them, negotiate some settlement, a payment arrangement.
You have to look at the big picture. You know what? You have to know where you're coming from to know where you're going to.
Well, let me take that a step further, ladies.
Oh,
because what you're saying, Diane, is absolutely 100% accurate. If it's yours, pay it.
Yeah.
But negotiate that once you pay it, they delete it.
Yeah.
Don't just stop with don't settle it.
Yeah.
And just say, okay, we're done. Take it a step further. Ask the creditor, will you delete it from my profile if I pay this in full?
Be
or
very
pay
nice
negotiate?
about it, though.
Yeah, absolutely.
Yes.
And talk to a supervisor because the supervisors are going to be the ones that have the final decision anyway. So just start with them and end with them.
Yeah, because it might be something you had no idea until you were just getting ready to start this process.
Now, it works 50% of the time. It's not going to work on every instance. So
we'll come to you, Anthony. Anthony said.
No, so you.
Well, we also, absolutely, I love that.
And we appreciate that, and ask for the delete. Yeah, you don't ask, you're not going to get, I guess.
Nope. And if you don't pay it, then go back and ask because at that point, too little, too late.
Right, I hear you. I hear you. Well, we also have situations where people have been in trouble before in the past, because of credit cards or whatever, and they've really gotten themselves back and together. However, they're paying cash for everything. So now hey, it's truth time. Now it's time to buy a house. They're clean, and they live no scores.
Yeah, Mr. Ramsey's a big proponent. Dave Ramsey, gotta love him. Love him to death.
I don't have to. I don't know him personally.
Well, I don't either.
No, but
I've tried his method.
He says,
I've tried his method.
But he is saying that. You're absolutely right.
Be debt free, and there's nothing wrong with that if you're a multi-gazillionaire and you can live debt free. But I'm an average Joe.
Okay.
I have debt. You want to have some credit. You don't have to go crazy with it. But to your point, if you have somebody that has no credit, depending on the profile, if they have zero credit, and I've seen a few of those in my day, opening a credit card, whether it's a secure card or just a Visa, MasterCard, whatever credit card you want to open, you can generate a score typically within 6 or 7 months. In some cases, 30 days.
Yeah.
So it just depends. So talking to an expert like Diana is definitely something that, as a consumer, you want to do, especially if you've been paying by cash. There are still the baby boomers. There's still quite a few of those that are old school that they pay everything cash, and they want to buy a home, or maybe they've been in their home and they had a mortgage, but they paid it off, and they just never have taken anything else out. They saved their money and bought their cars or whatever it may be, and now they want to go and buy a condo in Florida because they're retired, or an RV or whatever it may be. There's ways to help them.
And keep in mind, it's a difference between being not having a zero. I mean, having a zero score. Let me see. This is what I'm trying to say. You can actually have a credit profile and not owe anybody anything. You can actually have great credit scores and have zero balances on your credit cards if that's what you want. The main thing is, though, you're having some activity. You might charge it, let the bill come in, pay it in full. That may be the way you roll. So you really are not owing anybody long term, but the point is someone can actually determine in a traditional way, which is pulling your credit, getting your score. You have the ability to demonstrate and to show in a language that we lenders like to see that you pay your bills on time. So the person that has literally nothing on their credit report, and occasionally I do pull those, it's just you make it tougher on yourself when it comes time to getting credit, because your credit report is not really speaking the language that the lenders like to see. So once again, it's a matter of opening up a credit card, charging $10 or $15 a month, let the bill come in, pay it off, keep that habit going, and you'll be amazed at what that will do for your score. And Anthony, what's the good number of credit cards to have, generally speaking?
3 or 4.
3 or 4. Okay.
3 or 4
sounds good.
Probably something would need to be said often.
Yeah.
And the time frame, since we're talking about buying homes, so the time frame, Diana, is he actually saying 1 minute?
Time flies when you have fun.
It won't come out. Okay, so stay tuned. I had a really good question, too. It's about age, but we're done. I guess we're done.
We are done.
You have to come back, Anthony. You have to come back.
Time and place, ladies.
Anthony, thank you so much. We cannot tell you how much we appreciate your being here. Listeners, we love you guys. Thank you for listening. Callers, we love your questions. My name's Diana Rice Wilkerson. I am the lender. You can reach me at 317-402-5555, or my website is Loans with Diana, and that's DIANA. www.loanswithdiana.com.
And I'm Janice Bradley. I can handle all of your real estate needs. My number is 317-590-7348. And we forgot to have you like us on Facebook, home, handfinance.com.
Yes.
See you next week. Bye-bye.
Bye-bye.
You've been listening to Home and Finance with your hosts, Diana Rice Wilkerson and Janice Bradley. For more straight talk about financing a home and insider information about buying a home, listen next Saturday at 1 p.m. or call 402-5555. That's 402-5555.
The proceeding was a paid program.